Okay, so let's go ahead and look at this. We should be able to get through all of these. So we're starting with the questions from Chapter 5, dealing with FIFO, LIFO, weighted average. Okay, so we have the information as to what they bought and when, and if we're using weighted average, who wants to set this one up? Who wants to set this one up? Forgot already how to do this weighted average? Okay, Peter, you want to go ahead? Okay, good. So who wants to crank those out for us? 2,000 times 425 is 8,500. Good. 4 times 4,000, 450 times 4,000 is even. Okay. And 1,000 times 475, I guess I can do that one in my head. 4,750. Okay. All right, good. And you add those up and you get, huh? 31,280. Okay, good. Do I have a second on that? Huh? 31,250. Okay. All right, good. So 31,250, and then what do you want me to do with that number? Good. Divide it by the 7,000 units here, right? There's a total 7,000 units. And when I divide it, I get a weighted average cost per unit of, give me the big old number that's showing up in your calculator. Excuse me? 4.46. Did I hear a dissension on how we did this? No? Okay. So it's 4.46. Even? Give it to me the big old number. Give me that big old number. 4.46428, you say? Like that? Okay, great. Thank you. So 4.46428, and if I want to know the cost of goods sold, and they tell me that we sold what? 4,000 units. So I should be able to take 4.46428 times 4,000 and get something close to that 17,857 for the cost of goods sold. Okay, good. Now, if I bought 7,000 units and I've sold what? 4,000? Then my ending inventory, which is what they want here, must have how many units in it? 3,000 times 4.46428 should give me something in the ballpark of this 13,393. Okay, good. And it's not question 5, it's question 2. And I'm not going to, I mean, question 1. I'm not going to keep fixing that, guys, because I take these from old exams and kind of plug them in, but I sometimes forget to change the number. Watch me end up changing it every time now. Okay, but question 1. Okay, so what if we use FIFO method for our cost of goods sold? That means what? First in, first out. Okay, so to get the 4,000 units that we sold, I would have to do 2,000 units from the what? Times the batch 1 425 ones. And that gives me what? 8,500. Good. And how many more units do I need? Need 2,000 more, so I'm going to take these 2,000 from these what? 450 ones? And what's that? 9,000? Okay. Good. So I end up with what? A cost of goods sold here of 17,500, right? Good. Okay, how about if I were to do my ending inventory using FIFO? Well, now for my ending inventory, I have what? I have 3,000 units, right? Of which 1,000 are the 475 ones. And there's what? 2,000 of these guys left now? Because I sold 2,000. So 1,000 times 475 is 4,750, right? And then what? We've got 2,000 of them 450 ones left still, which is 9,000. So that gives me the 13,750, right? Choice E. Okay. Okay, good. What about LIFO, cost of goods sold? So we go back up into the table. LIFO is what? First in, first out? Last in, first out is LIFO. And so 1,000 times the 475, I'm going to sell those first, right? So I have the 1,000 times the 475. And how many did I sell? 4,000 total. So I need another what? Another 3,000, and I'm going to take those from right here, right? So 3,000 times 450 so that's 4,750. What's this one? 13,500. Okay, and that constitutes my 4,000 units. So I'm getting what? 18,250, I hope. Okay. Okay, good. Now, if I want my ending inventory using now LIFO, ending inventory consists of what? I'm down to only 1,000 of these now. And I haven't sold any of these 2,000. That's constituting my 3,000 in my ending inventory. So 1,000 times 450 is, of course, going to be 4,500. And then it was 2,000 of what? The 425s? And that's going to give me 8,500. Okay, good. And so that gives me 13,000. Okay. Question? Yeah. For FIFO, I first sold 2,000 of the 425 ones, and I still need 2,000 more to make up 4,000 units. Okay, let me finish, and please try to listen. So I'm sitting here, and I have 2,000 of the 425 ones, right? Because I took those first. Now I need 2,000 more to make up 4,000 being sold, right? So that next 2,000 has to come out of that 450 because these are all gone now. I don't have any more of those, right? So I have to go to those next ones, the 2,000. Okay. Question? Okay. 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 All right, good. All right, let's go ahead then. And, guys, those questions. Oh, sorry, we're not done with these yet. So then I ask, what is the gross profit using the FIFO method if I sell these for $5 each? Who wants to do that one? Peter? $5, not 5,000. $5 by the 4,000 units that we sold. And that's giving me what, 20,000, I guess? Yep. My FIFO cost of goods sold, right? Yeah, so my FIFO cost of goods sold was 17,500. Okay, so I subtract off that 17,500 from the 20,000. That's my sales. Guess I'll write it here. Sales minus my what? Cost of goods sold. What did we say it was? 17,500. So I subtract that off. That gives me gross profit of 2,500, right? Okay, good. Who wants to do the LIFO one? Same question, LIFO now. How about some of you people in the back row there? Particularly people that study accounting like this. Some people study accounting like this. This is how they study accounting. Because it's such a deep subject that you just need to really go into part of your brain that you can't access while you're awake. How about one of these? How about this one, huh? Good. So the sale price isn't changing. I did it again. $5. What's your name again? Hanisha. $5 times the 4,000 units gives me 20,000, right? Good. Then I'm going to get the cost of goods sold, but this time I'm going to take it from the LIFO number, and LIFO number for cost of goods sold way up here was what? 18,250. Okay, 18,250 comes off of there. Good. That gives me 1750. Do you think I'm going to ask you how to calculate the gross profit on this exam? Every time you turn around, I'm saying, hey, well, what's the gross profit, huh? Give me the gross profit. Okay. Why? Because when analysts look at a financial report, that's one of the key numbers they look at. I got a question from a colleague at Stanford who's writing an article who was a little bit confused on how gross profit was calculated versus something called contribution margin, which are similar but very important differences. And they were asking me about it because they were writing an article that was talking about key indicators that investors, entrepreneurs want to look at when they're preparing their financial reports. And the management science and entrepreneurship. What's the name of the department I teach for? Over there, they have a lot of those type of questions that come up. Okay, again and again, what are some of the key indicators in the financial reports? So this is something that would, gross profit is a big one. Okay, so I'm going to ask you that a lot. Okay, let's take a look at this one. Number 9, Buster's Company began business on January 1st, 2015. During the year, Buster's had credit sales of 200,000 and estimated that 2% of the sales will not be collectible. And I'm just going to erase this nonsense because it's not lining up right. We'll just do it. We'll just write it in there again. Clean. That's beautiful. Okay. So how much do we want to take for the bad debt expense based on this? Who wants to set this up for me? Don't be shy. Go ahead. Yeah. Well, if you want to. Yeah. Go ahead. So we take the credit sales, there were no cash sales in this example, of 200,000 times 0.02. That means that I have bad debt expense then of $4,000. Good. Can you give me the journal entry for that? Good. Credit the allowance for 4,000, right? Good. See, you guys can come up here and do these. See how easy it is? Now we go ahead and we do what? We set up the bad debt expense T account. I'm going to go ahead and debit it for 4,000. I'm going to go ahead and credit the allowance, I guess. Put the allowance over here, I guess. For 4,000. Okay, good. Then what? So our buddy Billy Bob, here he comes again, and he says he can't pay us. And this time he says he can't pay us what, $500? So who wants to give me the journal entry for that? If you've already given me a journal entry, just go ahead. Hog the microphone. Don't feel shy. Just go ahead. Or if somebody wants to break some new ground and speak, you know, I know you guys are all planning to, conquer the business world through silence, right? You're going to be one of these people that walks into the room and goes, and people go, ooh, bada boom, right? Okay. Okay. Good. Debit the allowance, credit the accounts receivable 500 right there, right? Okay, good. So we would debit the allowance for 500. And when we debit the allowance for 500, now it's got a balance of 3,500 left. Okay, good. Now this says that assume that the transactions in 1 and 2 are the only transactions could have potentially affected the allowance. Based on an aging of accounts receivable December 31st, Buster's determined that they need 6,000 in the allowance. Well, how much is in there right now? So if you want 6,000 in there, I guess you better put what, 2,500 more? So you're going to do what? You're going to credit the allowance, 2,500, debit the bad debt expense, what? 2,500. So now the bad debt expense is going to have how much in it? 6,500 in the bad debt expense total. I'll just put the balance over here. 6,500, right? And the allowance now, since I put what, another 2,500 in there, got what, 6,000 in it, which is what I want right about now in there, 6,000. Okay, so I got what I wanted. Okay, so what is the total bad debt expense for the period? You see I kind of wrote it over here too. 6,500, right? Okay. Okay, good. Come over and let's look at this one. And using the following information. Compute the days in sales inventory. We're not doing that. Wait a minute. Days sales in inventory. Yeah, I don't want to do that one. We're not doing that. You can skip question 12. That's not something I'm going to test you on. I thought it was a days in inventory, and it's not. Okay, number 13. And they want to know cost of goods sold using Fifo. First in, first out, right? So they tell me that they had beginning inventory. They purchased 220 more. They sold 140. Where did that first 140 come from? 140 times what? Came from here, from the times the $10 ones, didn't it? When we sold those? Okay. Okay, good. Then what? Then they bought 100 more units, and then they sold another 150. So we're down to what? 10 of these now? So we'll sell 10 of those to make up this second sale of 150 at $10. And then I guess we better start to sell some of these, right? So some of these 220 ones, right? So 220, we're going to sell, if we want to sell 150, we got to sell what, 140 of those? And 140, and those came in at $12. And you add all that up, and it should come to what, 31.80? Unless I'm having a bad day. Okay. Okay, good. Now you look at this next one, and this next one says same facts, but now we want to know the ending inventory. Now we know we got rid of these in that last problem. Same facts, but we know we got rid of these, right? And then we sold what? 80 of these 220s? Huh? Oh, sorry. 140 of those? Sorry. So 220 minus 140, I guess that's where I was getting the 80. There's 80 left. Okay. So we've got what? We've got 80 of those times what? $12 left. And then we haven't sold any of these, right? We've got 100 of those left of that purchase at $13. That's a dollar sign. Oh, come on. Times what? 12? And that's going to be times what? 13? For the 100, we haven't sold any of those. So that should all add up to 2260. Do the extensions here, and that'll add up to 2260. Hello? Great. Sorry, didn't mean to wake you up. Okay. All right. Okay, now you guys are doing a good job today. I don't see too much head bopping. A little bit. A little bit. A little bit of this is okay. A little bit of this is okay. This, no. Can't deal with that. Okay. All right, guys. Number 15. Income from operations is gross profit less. Now, what this is testing you on, this is chapter 4, and this is testing you on the multiple step income statement, right? So let's just remember the multiple step income statement. We have sales minus what? Well, we actually have net sales, right? And we know that net sales is going to be my sales minus what? No. Minus discounts minus returns, right? Guys? Gives me net sales, doesn't it? Okay. Now, most of the time, companies won't show you all that discount and return stuff. They'll just usually start you on their multiple step income statement with net sales. But for this class, you need to know what the net sales, how it's constituted, which is sales minus discounts minus returns. Okay, so there's my net sales. Then what do I do? What comes off of sales? This is what happens to an accounting teacher when you don't understand something that they expect you to understand. Don't make me go. Net sales minus cost of goods sold gives me, if you don't get this, I'm leaving. Huh? Gives me gross profit. What's your name, sir? Thank you, Richard. That's my dad's name. My dad's name is Richard. He's 88 years old, and he would know that. And he never studied accounting. Do you take the no, he would have no idea. I've tried to teach him a couple times, so he counters by trying to teach me Spanish, and then we leave each other alone. Okay, so what happens? We have what? Net sales minus what? Minus cost of goods sold. Difference is gross profit. Then I take off what? Who kept saying expenses? Okay, good. Then I take off my operating expenses. Normal course of business, right? Like salaries, that kind of stuff. Operating expenses come off, and after I subtract my operating expenses from my gross profit, I have what? I have operating income. Sounds like somebody has a date with the multiple step income statement. That gives me what? Operating income. And by somebody, I mean everybody, right? Everybody's got a date with the operating statement, income statement. When you go out with your significant other, make them tape a multiple step income statement right here. So during dinner, you can go, oh, yes, net sales minus cost of goods sold. Okay. Okay. And so then what? You have operating income, and then we take off what? Non-operating items, don't we? Which be things like gains and losses on sale of equipment, that sort of thing. Does Nordstrom try to sell you their cash registers? They do not. So that is a non-operating item. Let's just say it was a loss, so I'll subtract it. Could be a gain. And then the bottom line is what? Net income. Have you started talking like an accountant yet to your friends? When your friend's telling you a story that goes on and on, you say, hey, just give me the bottom line, please. Okay, they'll say, why did you take accounting? Okay, so what happens? We have our net sales minus our cost of goods sold gives us gross profit, minus operating expenses gives us operating income. Then we take our non-operating items, gains and losses, things that are not the normal course of business, like Nordstrom selling cash registers, and that difference is what? Net income. So income from operation is gross profit less what? Operating expenses, like salaries, that kind of thing. Can Nordstrom sell you clothes if some beautiful person doesn't come out and say, oh, I have the perfect shirt for you. This brings out your eyes. Right? Okay. Okay, good. You know they train them for all that, don't you? They tell them, you will take a return with as much happiness as you made the original sale. Do they tell them that? Yes, they do. So then when you bring back a nasty pair of shoes that you've been wearing for 4 months and say, well, the heel's not quite what I was expecting, they say, oh, okay. They go through training for that. Okay? That training is an operating expense, isn't it? Normal course of business type thing? Okay? Selling you the cash register, when they sell the cash registers, no, that's not what they're there for, right? That's non-operating. Okay, good. Now you come over. Sales revenue less cost of goods sold is what? Everybody. Everybody. What? Don't think you're not going to get that question, guys. You know what? 30 questions. Sales minus cost of goods sold is what? I'm going to ask 30 questions. Now you know how to calculate it. Okay. All right. Okay, good. Number 17. After gross profit is calculated, operating expenses are deducted. Now, I'm not in love with this question because a better answer would be what? Would be operating income, right? But in the absence of operating income, what's the next best answer? Net income. Perhaps this company doesn't have any non-operating items, so it would be true that you would take what? Expenses off of gross profit, and that number is simply net income because there are no non-operating items. Do they have to sell cash registers, Nordstrom? They do not. They may, and then we'd have the non-operating section, but if they don't, we just go straight from operating income to net income. I don't know that I would ask you that because that's a little tricky, but I didn't like that class. What test was this? Spring 2017? No, I'm just kidding. Sometimes I don't think about a question. I look at it and I'm like, oh, that's a good question. And then after I see it from the student's perspective, I don't like it as much. But sometimes I don't feel that when I'm just watching it, looking at it, the question while I'm by myself. Okay, December 31st, there were 26 units remaining in ending inventory. Using Lifo, what is the cost of the ending inventory? Well, if there's 26 units left, we're assuming that all of 10 of them are right here, right? Of the 26? Lifo? Okay, so we've got 10 times $1.20. I mean, times 120. How many do we need here? We need a total of 26, so I guess we need what? 16 of these at $1.25? I mean 125? Okay. So when we add that all up, we should get this number, 3,200. Right? Okay. Okay, good. Audio Express uses perpetual inventory system and records purchase of merchandise at net cost. The company recently purchased 200 CDs at an invoice price of $6,000, terms 210 net 30. What does that mean? 2% discount if we pay in 10 days. Otherwise, we have to pay the whole amount in 30 days. Good. Okay, half of these discs were incorrectly labeled and return immediately to the supplier. Did we have the same question as a homework question, as a quiz question? If the discount period is expired, the journal entry to record the payment. Now, guys, when you get questions like this coming from Chapter 4 that have sort of moving, no pun intended, moving parts with amounts being returned and discounts and all that, your best bet is the fastest way to do it is the long way, to go through each one of these one at a time. So they purchased what? 200 CDs at an invoice price of $6,000, right? So they should have debited inventory at that time and credit accounts payable for $6,000, right? With me so far? Now I'm going to go ahead and I'm going to tee up accounts payable over here, and I'm going to credit it for $6,000. Let's do inventory too. Why not? Won't kill us. For $6,000, just teeing those up. Okay. Then what? Then they tell me that half of the disc were incorrectly labeled and were returned immediately. So we're going to do what? Half of that, debit accounts payable, 3,000, credit inventory for half. And when I do this, the inventory balance comes back to 3,000. The accounts payable balance comes down. I don't know if it goes back to, but it comes down to 3,000, right? Okay. Okay, good. Then we come over and they say if the discount period has expired, the journal entry to record the payment, well, we have that accounts payable 3,000, don't we? So we'll debit accounts payable 3,000 and we will credit cash for 3,000 to pay that. And when we debit that 3,000, now there's zero sitting in there because we paid it. Okay. So is it true that there was a credit to cash for 3,000? Okay. I'm telling you guys, that's the way to do it. If you look at a question like that and you start trying to guess and back into the answer, you will be hopelessly lost and you'll start wasting more time than you are saving by doing that. Just go through the steps in a question like that, then look at the answer, and that makes it much easier for you, I think, than trying to do the thing of looking at the choices and then trying to figure it out. Okay. Okay, good. Number 20, Glenn Company purchased merchandise inventory with an invoice price of $7,000 and the credit terms were 210 net 30, 2% discount, paying 10 days, otherwise pay the whole amount in 30. What is the cost of goods sold if Glenn pays within the discount period? Now, what's happening? What is the net cost of the goods, not cost of goods sold? What is the net cost of the goods? In other words, they're purchasing these goods, right? So again, we debit what? Inventory for 7,000, credit the account payable for 7,000, right? Okay. And we're going to go ahead, tee up inventory, why not? Tee up accounts payable, right? Okay, so we debit inventory 7,000. We credit the accounts payable 7,000, like that. Okay. Then what? Then they tell us that they pay within the discount period. So that means they got a what? On this 7,000, they got themselves a 2% discount. What's that? 140? Okay. So when they go ahead and they pay this thing, they're going to go ahead and debit the account payable for 7,000 because the guy is willing to accept the full accept the payment for the full amount, accept payment in full on this for a little bit less, right? Okay, so we're going to credit cash now for the difference, which is this 6860, and then we're going to do what with this credit for 140? Where's that going? Where's that credit for 140 going? How much did I pay for that inventory? How much did I pay for that inventory? 6860, didn't I? So don't you think that the inventory then should show that I paid 6860 for it? Is that the balance that's in there now? Isn't that what I paid for it? Beauty. Beautiful. Look at this. I'll probably go back and look at this problem one more time before I go to bed tonight. This is so beautiful. Look at this. Okay. Okay, good. Come over and let's look at Jake. And we want to know how much the inventory increased. By the way, go back to that previous one just for a second. You know, I don't know that you had to go through all that. I mean, in part, we're kind of reviewing things here, so I went the long way on that one. Sometimes you don't have to. I mean, that one, 7,000 times what? If they gave them a 2% discount, then it's times 98. Would have given you the same answer? Times 0.98 would give you the same answer. Okay. Okay. All right, let's take a look, though. This next one, though, again, when you see a sort of a little block of information like that, and again, guys, I'm kind of in CPA review mode right now. I mean, these are the kinds of things that I point out to my CPA review students all the time. You see a block like that, that's telling you, bust out a piece of scratch paper here, and you're going to have to go the long way and make all the journal entries for this in order to get this right. Otherwise, you start trying to skip and figure out and look at the choices. I promise you, these problems are designed to mire you down, to take too much time, and they offer answers that are pitfalls for common mistakes and stuff. So they're trying to make you fall into a hole by doing it that way. So the way you avoid it is by doing it the long way. So we received goods for 50,000, so we're going to debit inventory. For 50,000 and credit the account payable for 50,000, right? And we're just going to go ahead and tee those up. Accounts payable 50,000. I'll do inventory over here. Inventory debit 50,000. Good. Okay, then what? Returned $1,000 of the shipment for credit. So I'm going to go ahead and do what? Debit the account payable for 1,000 and credit the inventory here. I'm going to write it down here for $1,000. And when I do, the inventory balance is now what? 49,000? As is the accounts payable also got 49,000 in it. Just kind of write that over here. Okay, good. So we got 49,000 in inventory, 49,000 in accounts payable. Then what? Paid 250 on the shipment. If I pay the shipment, I usually pay that for the shipment. I usually pay that in cash, don't I? So I credit cash 250. What do you want me to debit? Good. I'm going to debit inventory. Very good. Debit inventory for 250 because what? Any cost that you pay to get an asset to your business so that you can use it productively in your business is part of the cost of that asset, isn't it? Okay. So I go ahead and I debit inventory for 250. And when I do, that becomes what? 49,250? 49,250. Okay. And then I pay the invoice within the discount period. So if the invoice has, I don't know, I'm kind of running out of room here. Where do I want to write this? 49,000, I guess I'll have to write it here. I don't know where I'm going to answer this next question. 49,000 times what? Times, what is it, 2%? Okay. Times 2%, I get a discount of 49,000 is the account payable. Huh? 980? Okay, good. So I have this discount of 980. That discount is going to go against which account? Good. So I'm going to go ahead and I'm going to do what? I'm going to debit the account payable for 49,000. I'm going to credit the inventory for what? 980, you tell me? And I'm going to credit my cash for, they gave me a 980 discount off of a bill of 49,000. How much is that cash that I have to give them? Huh? They gave me a discount of 980, didn't they? If I owed them 49,000, how much is that cash that I'm going to send them? 48,000 what? 20020? Okay, good. And so what happens? Did I post up my discount on the inventory? Inventory got discounted 980, didn't it? So what's the amount in the inventory account now? 49,250 minus 980. $48,270. What do you know? Is that the right answer? Okay. So you have to go through that whole process to get that answer. There is no way to back into that answer just messing around trying to figure it out by saying, okay, here was got to be one of these answers. It was what? It was the original 50,000. I returned 1,000, so that brought it down to 49, didn't it? I added the shipping cost because that's part of the cost of the inventory. I subtract the discount from the inventory, don't I? Okay, the collection of a $4,000 account with a 2% discount will result in, and if I have 4,000 and I have a 2% discount, that's giving me a discount of what? $40? Oh, huh? $80, I mean? Okay, thank you. So $80. Okay. And so is it true that I'll have a debit to sales discounts of 80? Well, is it true that I'll have a debit to account receivable of 39.20? No, I'm going to credit account receivable for 39.20, right? when I record the, I mean not for 3920, when I record the receivable, let's just do this one the long way. I debit accounts receivable of what? 4,000. I credit sales, don't I? For 4,000 when I make the sale. And then what? Then the dude pays me, but he pays me within a 2% discount, so he's going to get an $80 discount, isn't he? So I'm going to do what? I'm going to credit cash for 4,000 minus 80 is what? 3920? Huh? 3920 is the credit to cash. I'm going to debit the accounts payable for what? The full 4,000? Right? And I'm going to debit what? Discount for 80, right? I mean, not debit discount, but what am I doing? Not accounts payable. Yeah. What am I doing? I'm collecting money, right? On account receivable. So I'm going to debit cash for 3920. I'm going to credit the account receivable for what? 4,000. The guy's paying me, isn't he? So I credit the accounts receivable for 4,000. And I'm going to go ahead and do what? Debit the discount for 80. So is it true that there is a debit to the discount for 80? Chapter 4 in-class problem that you were supposed to master is this. Chapter 4 in class. I said everything comes from that in-class example from chapter 4. Okay, but if we offer a discount, then we don't expect them to pay us the full amount, do we? So we got a little less cash. We still liquidate the receivable by crediting it, and that is a discount. So if this company were going to report their net sales, how would they do it? Net sales for this company. For this question right here, the net sales. I'm not doing the next problem, even though that one is also asking some of that. Huh? Good. Very good. I'll show sales of what? 4,000? And then I'll show the discount, and the discount is 80, and the net sales are what? 3920. How much cash should I get? Beautiful. Okay. Okay, good. Now, leveraging off of that, they give me some information, and they want to know what's the net sales. They want to know what's the gross profit. Who can give me the net sales? I'm going to put this in blue just because this red is starting to get a little trafficy up here. So I'll put this one in blue, assuming this thing doesn't jump me somewhere I don't want to be now. I'll put it down here. Good. Sales. See, now you have such a nice, well-modulated voice. You should talk more. Let the world hear it. Maybe some radio executive will say, wait a minute. We'd put you on radio, but you belong on TV. Okay. All right. So sales is how much? Sir? What's your name? Josh. Sales is how much? 470,000? Yes. Good. That's all right. Less, and you want me to take off what? The discounts and the returns? Yes. Sales returns. I guess we didn't have any discounts, huh? Less sales return of 20,000. Okay, good. So that gives me net sales here of 450. Right? Now, Josh, you look at that, and thank you, God. That's the world's easiest question because only one of them has net sales, right? I'm thinking on the test I would make all of them show 450 net sales so that you have to calculate my favorite one, which is what? Gross profit. That's going to be what? Net sales of 450 minus what? Beautiful. Brings tears to my eyes. Minus cost of goods sold, right? Cost of goods sold is 270. Net sales minus cost of goods sold of 270 gives me gross profit of 180, I guess. There we go. Okay. Gross profit percentage. Guys, I think this might be a in-class midterm prep teaching alert. I don't know that I've shown this to you previously. So be ready for an in-class midterm review teaching moment. Teaching alert. Ready? Okay. All right. So gross profit percentage equals gross profit divided by net sales. Okay. So if you look at these numbers, can you get me that number? Can you get me those numbers? Sales is what? Good. Sales equals 2 million. Okay, good. And then what? What do you want me to do? Sales returns is going to be 360,000. That's going to subtract off, right? Anything else? Sales discounts got to come off. Of 40,000. Anything else? I don't think so. So you take your what? Sales minus your sales returns minus your sales discounts. That gives you 2 million minus 400,000 gives you what? 1,600,000. Huh? 2 million minus 360 minus 40,000 should give you 1,600,000, right? We're good? Okay, so we've got our net sales, 1,600,000. Now we just need our gross profit. So we take 1,600,000 of net sales and we subtract what off of that? Cost of goods sold. Cost of goods sold is 1,120,000 equals, I'm waiting, 480,000. Okay, so 480,000 divided by 1,600,000 right there, my gross profit percentage should be what, 30%? Okay, so right there, guys, gross profit percentage is going to be what? Is going to be my gross profit divided by my net sales. That gives me my gross profit percentage. That means that 40% of every sales dollar goes towards my gross profit, doesn't it? That's pretty good. I'm thinking a company could probably live pretty nicely right there because that means they've got what? Bunch of money left over to cover operating expenses and any non-operating type items that might come up. Okay. Okay, good. Number 24, warehouse 13 had credit sales of 750,000. On December 31st, 2013, the allowance for doubtful accounts had a credit balance of 16,000. During 2013, 29,000 of uncollectible accounts receivable were written off. Past experience indicates that 10% of the balance in the receivable Past experience indicates that the allowance should be 10% of the balance in the receivable, so we're using percentage of receivable method, aren't we? Okay, now let's just go through this thing. We've got what? We've got a credit balance in the allowance of 16,000, right? And then during 2013, 29,000 of accounts receivable were written off. Journal entry to write off receivable. Journal entry to write off receivable. Journal entry to write off a receivable. Journal entry to write off a receivable. Journal entry to write off a receivable. Huh? Good. Credit the account receivable for 29,000 because I'm getting rid of that receivable. The guy can't pay me, right? What do you want to debit? Debit the allowance. That's why we have the damn thing. We have the allowance so we can write amounts off against it when they come uncollectible, right? Okay, so we have what? We have now a debit balance of how much in this stupid thing? 16 minus the 29. What's the debit balance in here? 13,000. And I'm sitting here and I'm telling you that I want the balance to be what? 10% of the receivable balance. Where's my receivable balance? 200,000, right? Was the receivable balance? So I want there to be 20,000 in here, credit balance, and right now there's what? 13 showing there. So I guess I need what? A $33,000 credit? If I credit this for 33,000, will the balance be 20,000? Right? So I debit bad debt expense for 33,000 and I credit the allowance, right? For 33,000? Which you just saw right there? That credit right there? So the answer is what? C. The adjustment to the allowance is to credit it for 33,000? Right? Debit bad debt expense, credit the allowance to put amounts in there. You either do it based on percentage of sales during the year or you make a year-end adjustment to bring it to you want it to be at the end of the year, right? During the year, you have write-offs. You debit the allowance, you credit the accounts receivable, right? That's it. Stop making more out of this than it is. Debit the bad debt expense, credit the allowance, write off, debit the allowance, credit the account receivable, whatever the balance is that you want it to be at the end of the year. If there's a debit balance in there, then you're going to have to credit it all the more, aren't you? And the way you come up with the credit, notice I don't come up with numbers very quickly usually. That one I came up with quickly. It's simply what? If I need 20,000 in there and there's already 13 debit, you add the two together. What do you need? What's the debit balance? Gives you the 33, right? If there's a debit balance. If it's a credit balance, then you just credit to bring it up to what you need. Okay, number 25. A company has net credit sales of $950,000 for the year. It estimates that uncollectible accounts receivable will be 2% of sales. If the allowance for doubtful accounts has a credit balance of $2,000 prior to the adjustment, its balance after the adjustment will be a credit of, now look, they're only giving me the sales number, aren't they? So I guess I have to use a percent of sales method, and the percent of sales method pays no attention to what's already in the account balance, right? Okay, so what's happening? If I take the 950,000 and I multiply that times 0.02, that gives me what? Huh? 19,000 you say? 19,000? So I don't worry about what's in there at that point. I simply debit bad debt expense 19,000 and credit what? Credit the allowance 19,000. Now the problem tells me that my buddy the allowance already had how much? Already had 2. And if based on sales now I put another 19 in there, now the balance is what? 21,000. Percent of sales, you do not trip on what's already in there. Sales has got there's already a balance in there, but we're basing this on sales, aren't we? So it doesn't matter what's already in the allowance. If we're using the percent of accounts receivable balance, then what? Then we do pay attention to the balance that's already in there. Okay. Okay, good. Let's take a look at this one. Chandler Company had net sales of $1,125,000 on January 1st, 2013. Allowance for doubtful accounts had a credit balance of $27,000. During 2013, $42,000 uncollected receivables were written off. Past experience indicates the allowance should be 10% of the balance in the receivable, which is $330,000. So we're using the what? Percent of receivable method. So we're going to have to adjust it to what we want it to be, right? Okay. So what happens? It started out with the allowance with how much? Good. 27,000 is what it started out with. That was the starting balance. But then it ended up with what? Write-offs of 42. So if I debit it for 42,000, now the balance in here is 27 minus 42 is 15,000. It's a $15,000 now, but it's a debit, isn't it? Go ahead and put DR next to that just so we remember that that's a debit. Okay. Now they say that they want what? 10% of this 330, don't they? So we take the 330 times 0.10, what's that come to? 33,000? Like that? Okay, so they want 33,000. How much do they have? 15 debit, right? So to get rid of that, we're going to have to do what? Take the 33 plus the 15. That's what? 48,000? If you debit this for 48,000, now I end up with the desired 33,000 balance in here. Ooh, that one didn't even have an answer. 48,000? How many more of these do we have left? How many? 4? You just want to knock them out? Yeah, okay. Let's knock them out, and then we'll just get out of here, okay? All right, let's take a look at Beckman Enterprise. Purchased a depreciable asset on October 1st, year 1 at a cost of $100,000. The asset is expected to have a salvage value of $20,000 at the end of its 5-year useful life. And if we use double declining balance is going to be what? Double the straight line, isn't it? Okay. And so what's the straight line here? 1 divided by 5 equals 20%. And if we double that, that's what? 40%, isn't it? Okay. Now, notice they gave us the salvage value. Trying to distract you there, right? Salvage value is not relevant to the double declining balance method, except that we have to remember don't depreciate below salvage value. But we don't use it in the calculation. So I take this, what, 100,000 they paid for this thing? Times what? Times, thank you, 40%. I almost did 1/5. Times 40% times what? When do they put the asset into use? Okay, so we're done. Okay, so look at the rest of these on your own, guys. I'm not going to deal with, you guys just turning off and taking notes as I write things. Okay. When did they put this thing into use? October 1st. So they used it for how many months? Okay, we're done. Okay, all right, guys. I'll go ahead and I'll post the rest of this up. You can go ahead and take a look at these on your own. Okay, and be prepared for the exam, which will be on Monday. Okay, and I will go ahead and post this thing up on Canvas. All right.